Good morning. It is Friday, June 21st, 2024. I am Mark Sebastian, your only option, and I am joined by one Queen of Candles, the belle of the beach, if you will, Leisha J. Leslie.
Good morning.
Good morning, Leisha. I'm hearing myself for some reason. Are you hearing my echo too, or is it just me?
I can't hear it.
Oh, that's weird. Oh, I know exactly why. Now I've got it fixed. I forgot we're streaming into the Option Pit live room as well as here at Tradier and
Whoa.
on Twitter and on YouTube. We're streaming worldwide here at Option Pit Live, and I just had one of my speakers on, so that would explain everything. Good morning, Leisha. How was
Good
your
morning. How
day?
cool are
How are you
we?
doing?
I'm doing great. TGIF, how are you?
I'm doing great. You look like you're, on this second day of summer. You look like you're ready to go hit the beach and hang out. It's a tight look. Way to go. It's quadruple witching today. That is a big deal. For those of you that don't know what quadruple witching is, Leisha, would you kind of fill people in?
Sure. It's three things are expiring, right? The June S&P 500 futures contract, the options, June options, monthly options are expiring, and the
index options too. That's right. Yeah. It's futures
I mean,
options.
it really doesn't matter anymore. We have so many expirations. I kind of think it's a moot point.
It's not the big deal it used to be, and quadruple witching used to be a crazy day.
It was because it was our only expiration, though. We used to have quarterlies only for a long time, long time. So it was a big deal.
But but even so, even with SPX, with monthly options being less important than they used to be, what is interesting is the amount of contracts that kind of disappear today. There are hundreds of thousands of contracts that just kind of disappear, and so that can create some liquidity pockets in the market starting Monday and Tuesday, and sometimes post expiration you can see moves get a little bit more volatile than than when we built up this full month of expiration, because there's a ton of concentration on 0DTE. 0DTE, so the stuff that expires today and tomorrow, is kind of turned into its own product. I don't even consider it a part of the S&P 500 anymore, because people buying and selling options next July or next August, they have nothing in common with the person who's trading options today. Wouldn't you agree with that?
Well, yeah, I'm just looking at today's open interest on the, at the money straddle. It's not huge. It's very small. 3,300 on the call, 3,400 on the calls, 3,200 on the puts.
Yeah, it's not.
It's not. I mean, that's not.
It's nothing like it used to be.
That's
well,
nothing.
all of the open interest is going to be because of the kind of quick moves. You'll find weird spots where there's open interest. You'll be like, wait, why is there massive open interest on the June 5300s? Things like that. And
5550 calls.
Yeah. But all of that disappears. And so you also have June futures rolling off, June futures options rolling off, and then regular equity options. I think the equity option piece is probably the least important part of that whole puzzle. So quadruple witching, not what it used to be, but it is interesting, and you can see the effects of quadruple witching typically in the first few days after an expiration. Well, as we're leading off the show, kind of an interesting day. Well, there's not a lot of news or anything like that, but NASDAQ futures are down about 0.1%. S&P futures are down about 0.1%. I'm going to go out on a limb. I haven't looked yet, but I'm going to guess Dow futures are up. No, they're down too. Dow futures down about 60 points. So, looking like a slightly down open after some really weird price action yesterday. Nvidia had a 10-point range, which if you had brought that up pre-split, that would have been nothing. But
Right.
remember, this thing split 10 for 1. So it had a 10-point range and the stock is $130. It means it moved almost 10% up and down in a single day. That is some wildness. What do you make of that candle, Alicia?
It was actually 11 points. It
Oh.
is very bearish. Look at the volume supporting it. Very large red bearish candle, bearish engulfing. Now we need to hold these lows here, 130. Yeah, right, 130, 129, 130. If we don't hold those lows, then video will be trading down here, 125.
Yeah, it was an interesting day yesterday in that the story leading into yesterday was tech is everything and everything else stinks, right? The Dow Jones Industrial Average hasn't seen a new high in over a month. Meanwhile, the S&P and the Nasdaq in particular keep hitting new highs and new highs. Well, yesterday there was a bit of a turnaround there. The Dow was up about 300 points while the S&P was down 13 and the Nasdaq was down bigger than that. It kind of a big rotation. You look at names like Exxon and J&J and 3M and GE, they're all up. Meanwhile, Apple, another name that has just been to the moon since they announced putting in
Yes.
a third-party application into their phone, it got toasted as well. What was your take on the price action on Apple here?
Let's take a look. Apple had a nice rally. It's holding the support level of the pitchfork.
Mm-hmm.
Below there today, the support comes into a 6.25. It looks like it's I mean, that's not that far down, right?
No,
$3. That should probably hold. If not, then we'll be visiting down here into this old one right around 200, 201.
Yeah, Apple is a pretty flat pre-market. Pre-market Nvidia is down another $2, which is kind of interesting. But meanwhile, you've got the Dow Jones that had absolutely popped yesterday after just kind of just a dead, what felt like kind of almost like a lost month, right? It just been kind of floundering and finally breaks out yesterday.
Yeah, after that double top, it pulled back. Bullish engulfing, kind of like you say, consolidating though for the last couple weeks. But
Mm-hmm.
now it's breaking out over those highs, those previous highs. Looks like 39,500 on the upside.
Yeah. Well, I'm interested to see if it can get back above 40,000. It has not. I don't believe it's managed to close above 40,000 yet.
Doesn't look like it.
So that's kind of the. I don't
Oh,
know
it
if we can
did.
hear our Dow 40,000 hats until it closes above.
May 17th it did.
Oh, May 17th it did. All right.
It did.
So
Close to
excuse me.
$40,003.
Well, I forgot my
$0.60.
my Dow 40,000 hat. Where
Yeah.
I should have worn it on May 17th. So we've looked at Nvidia and Apple. Let's take a look at some of your other big charts. The S&P and the Qs, obviously, they're super related to those two names. I mean, the top 9 names in the triple Q make up over 50% of the index now. Broadcom, AVGO, is now the 4th largest company in the world, surpassing Google and Amazon, which is crazy. But let's start with the S&P futures. What are you seeing here, Leisha?
We are seeing we're at the top of the pitchfork now, which is a resistance level that you're going to be looking for a change in trend candle, a pullback, And at this point, yesterday looked like it could be a doji. And this morning we're getting some confirmation. But we don't want to discount it too fast. If we can hold like 5,500, we could just bull flag here and maybe take a leg higher. But below 5,500, we're down here at 54.58.
It's been a nice rip.
Yes, it has. Then 53.91 down here. Yeah.
All right.
Yeah. Hard to say. It could turn. You know, we've already come back a little bit. There weren't any numbers at 7:30, were there?
No,
8:30?
no. We've got a PMI number coming out at 9:45, but other than that, there is not a lot of data here on Friday today. Nvidia is softening. That seems to be what is pulling us a little bit lower here.
A pullback could be healthy though, right?
Yes.
Pullback could be healthy. Now on the SPX chart, we have support right around yesterday's lows, which is a little higher today. SPX, our support comes in at 54.69, 54.70. Watch that and watch yesterday's low. If we bust through yesterday's low or below 54.50, we could retest these lows for 5,400, right? 54.02.
Mm-hmm.
So far, we've held.
I mean, that's kind of the story of the year, right? It's like,
yeah,
2024. So far, we've held.
Right.
That's it. I feel like that's been every time we've kind of hit a resistance point. It either consolidates there and then takes off, or
Right.
holds and bounces. I'm trying to think of
back,
when we really broke some serious resistance, and I don't think we were really able to do that back in April.
Well, you can just see the trend, right? You can see the
Mhm.
trend clearly in this pitchfork. The trend is higher. Even if we do pull back, our trend is still higher, right?
Yes.
A pullback could be healthy.
Yes. What are you looking at in the Qs? I'm guessing the same thing or something similar. The Qs and the S&P are becoming more and more the same product.
Yeah, we had a little doji yesterday. This is some pretty stiff resistance up here. Also held support though on the close. Today's Q support come in a little bit higher on our uptrending pitchfork at 482, but same idea. Yesterday's highs will be resistance. Those previous highs, 487. This looks bearish, but yeah, we'll need to see. And if we do break that support, the median line is 477. 477.
So
we did have the volume too yesterday to support that reversal.
Yeah, volume was pretty good yesterday, believe it or not. It was nothing insane. Let's see. You wanted to look at gold and crude as well. Crude actually has turned around a little bit.
It sure has.
Last couple of days.
It's broken out over that resistance that had been floundering for so long, right after taking a dip. Yeah, crude looks pretty free to trade up here, 84, 86. It's broke out above these highs. It's looking higher. Gold finally broke out of its consolidation here. It had to make a decision. And it held. It's amazing how it just hung on there, right?
Yeah, look at the way those things hold. It is
crazy. And then
there's a reason why you use these things, right? Because they work.
Yeah. Yeah. I went long gold yesterday in Option Shopper. 24.19, 24.20. It's resistance up here.
Yes. For those of you saying, what is Option Shopper? That is Leisha's charting and trading service that we have here at Option Pit. So if you want to meet with Leisha weekly and have her go through every single chart you could possibly ask for on top of what she's watching, you can call my team 888-872-3301 and they'll hook you up with they'll hook you up with a opportunity to join Leisha on the option shop as the option shopper. So
MACD is
gold.
also crossing positive in gold. So I like gold higher. GLD, I'd say 223 at least.
Mm-hmm.
And then
That.
possibly up here, 226.
Any other charts you're looking at? Let's before we rope in Andrew. What do you see in crypto?
Bitcoin has had a nice little pullback. It looks like it's going to want to trade down here, 60,670, 61,000 maybe by the time it gets over here. I would draw this little mini downtrend line. Yeah, it looks like it wants to trade down here before it's ready to bounce again.
Yeah, it's been an interesting pullback. Rates have gotten stronger. If bonds are starting to have rallied the last few days, that seems to be sticking a little bit of taking a little bit of the wind out of the sails of Bitcoin.
Right. Here's the 10-year bull flagging, trying to get over that resistance. TLT is holding support.
Yeah, what do you folks think? I mean, the long-term trend, it feels like we broke out of the long-term trend of bearish bonds in the last few weeks. What do you folks think? Is now the time to if you think interest rates are going to drop and you want to own credit, right? You want to own bonds. When you think interest rates are going to drop, it is important to increase your duration at that point. Because falling bonds, you're going to see that front end of the curve fall much quicker than the back end of the curve. And the back end of the curve, obviously, if I go out and buy a 30-year bond, well, I get that high interest rate for the next 30 years. Here's a story about that. In 1981, I was 3. This is not about me. This is about my dad, who was in the bond business. He's on the phone with a banker, and he's explaining to the banker that he should buy this 30-year treasury with a 12% coupon, non-callable. And at the time, the 5-year was trading about 14. So you had a coupon of 14 on the 5-year, coupon of 12% on the 30-year. And my dad convinced the guy to buy, I don't know, millions and millions of dollars worth of the 30-year. Well, the 30-year went to like 12 and a half. And the guy got on the phone, called my dad an idiot, bought some 5 years with a coupon of 16%. And the 30-year never saw a higher print at that 12 and a half and immediately dropped. And this is called reinvestment risk. When he went to reinvest that 5-year note in 1987, folks that are old enough to remember, how would rates move between 1982 and 1987? That they absolutely plummeted. Right, by 1987, the 30-year was down to about 8%. So the guy cost himself dearly. So if you think moral of the story, if you think rates are going to drop, extend duration. All right, guys, what do you think? Are rates going higher or lower than here? Let us know. Speaking of letting us know, no one is better at letting us know than one Andrew T. Giovinazzi, and we are going to be joined by him to talk about a little more trading action. Welcome, ATG.
It is good to be here. Thank you very much.
Good day to the Viking of volatility.
I'm feeling I should wear a Viking hat. Maybe I got to find a Viking hat one day. One of those, with the horns and stuff.
Let's not say we did.
I don't know. Then our subscribers would make me sing some Viking song, and then everything would go south quickly from there. I feel.
Yeah. Andrew, let's kind of an interesting trading day yesterday. Leash and I led off the top of the show talking about NVIDIA and the 11-point swing that it had yesterday. What was your take on that swing?
I don't know. Maybe somebody finally selling some. I think the biggest problem is, nobody has wanted to sell their Nvidia. Why? It just keeps going up,
Mhm.
So the stock's up tenfold since October 2022, which is pretty hard to believe, but that's what it is. So we should see some more volatility to higher price. I'm not saying this is like the .com days, but like the trading action is similar, where people pile into a few names. In those days, it was kind of like Microsoft, Cisco, EMC, and then Yahoo and Amazon sort of drag things higher, eBay a little. But with that rise to like all-time highs in the market at the time, we had pretty decent volatility. I don't know if people remember, but the Q was up 80% in 1999. That was
Mhm.
after a 7-year bull market.
Right.
So you're like, it can't go higher. It can't do this. It can't do that. Okay.
It can.
Now, granted, the U.S. government, I think, was better run back then, to be quite honest. But the debt, there was no deficit anymore. They were actually paying down debt. There was a shortage of government bonds, if you can believe it.
Yeah.
So interest rates, were higher than they were now. And everything was kind of like in a runaway growth phase. So I think the AI thing is providing runaway growth for chips. So even a couple of years ago, if you think about it, like 2 years ago, we had a chip shortage because there wasn't enough chips for cars. Like I just
Yeah.
went car shopping, and I'm kind of a whatever. I just like
Well,
staying on my rock.
we know you and you've got a,
Like now cars, I
you got
can't
your
believe what cars
Lexus and
do.
everything. We all
Yeah,
know
but
how
it's an old
wealthy
one.
you are.
It's an old one. So, but I can't believe all the chips in cars. So now
Yeah.
all of a sudden, cars need chip, and now AI, we're going to need a jillion more chips. So the growth picture is at least as strong as it was when we had the internet. Before that we had, computers, right? There was the computer tech boom, and
Yeah, IBM.
so there's always technology always leads, at least in the US. So I think the growth picture is there. Like how big can Nvidia? Who knows, right? Usually the stocks that go flying do come back to earth at some point.
It
Because
smells
there's
like a little
competition.
bit, the last time a pure hardware company was the largest company in the world was, and I'm going to say Apple is not a pure hardware company, right? I know the phone does drive the majority of the revenue, but
Software services, stuff like that too.
software services, and they do computers. It's not like I mean, really, Nvidia is a component company. It's not even, I mean, it is, they make a component for one thing.
Yep.
Right.
Yep.
That's more a Cisco than it is a Apple, right? Do you see any similarities, Alicia? I'd love to, and folks at home, you were around for this period of time, right? When Cisco became the largest company in the world. I was on the floor. Andrew was on the floor, or actually, I was in high school, but Andrew was trading, and I think and Alicia was. Do you remember that period when Cisco became the largest company in the world? And do you see any similarities here? Folks at home, let me know whether you see any similarities as well. What do you think? I'm just a young buck. I need to be educated on this.
I have no idea. I don't remember.
Okay.
Well,
Hey.
I have my memory with all that. I don't know how you guys, it's like movies. Men remember all the movie lines and all that. Women don't. If it's not pertinent to me now, I'm sorry. Maybe I'm a female and my age. I don't know. I don't remember.
Okay.
I was in my own world there.
I'm so glad you said that, Alicia, and I didn't, because it would cause mayhem in the internet.
Yeah, no, she could say that, you can't. Let's just remember.
I cannot. So
I probably shouldn't be saying it, but you know what? I'm honest.
the
I
thing
mean,
that
hey,
really
Anything, I'm honest.
yeah, like
Yeah.
the latter part of the internet phase was like everybody and their brother was buying options, like late stage,
Okay.
and we're not there yet. Um,
Okay.
so we're at the point right now where I think we're kind of mid cycle, to be quite honest, where there is tremendous growth, right? Most people now are still too worried about like inflation and buying there's a lot of other stuff I would say going on. The internet caught fire and then it takes a while to get to the public's imagination. And I don't think we're quite there yet, but we're getting there. But
Yeah.
I remember sitting for days like in the late 90s going into 2000, you couldn't buy an option as a market maker. Like you couldn't buy options in any because everybody just came in and like, oh, it's the next. It was like a stock would come out, it had .com in it, and everybody just bought calls, and they would go up like $100 in like 5 seconds.
Can you imagine
I
trying
do
to tell that
remember
story?
one thing.
Okay.
Can I tell you one thing I do
Yeah.
remember?
Yeah.
I backed a kid back in the day, and he traded and the video was in his pit. Honestly, it was like $7.
Yeah.
Yeah.
I do remember that. Did I keep any of it though when we, diluted and left? No.
We I traded, what did I trade? I traded Novellus, which was at the time I think a competitor of them, and KLA Tennecore. I think they own KLA. Do they? Is that? I think
Oh,
they own
Clack.
KLA Tennecore, don't they?
Yeah, that was Clack. I think they've been bought out by now.
No, actually, that is still its own company.
Really? Wow. Weren't they component like a chip maker thing, something fab?
Yeah,
Something?
I'm gonna go look at that one during Delta Strike today, just for old time's sake. Speaking of old time's sake, one of the things I keep trying to explain to people is people think that this ride higher is, it has been driven by tech, but that doesn't necessarily mean if tech pulls back, the market has to go down. And we saw a little bit of that yesterday, right? Yes, Nvidia got pasted, right? Uh, big whack, right? They turned it into apple juice. Uh, they kind of across the board for all the mega caps, but it was points. Why? Look at J&J and GE and Norfolk Southern and JP Morgan. Money, it didn't leave the market just because they were selling tech. It rotated in. What was your take on that look yesterday, Andrew and Leisha?
Oh, do you want to go first, Leisha? I was saying like, one benefit of having the market being carried higher by 3 or 4 stocks is that the other 495 stocks in the S&P 500 can rally.
Yes.
You can look at a lot of stocks that haven't done a lot. Of financials have done pretty good. They've pulled up. Oil could help, but I think a lot of Main Street industrial stocks could move a little higher. Healthcare, like J&J, one of your favorites, Mark. I think it's a great, there's that latter stage of whatever AI will probably help a lot of companies' earnings. So that's how markets go higher, because all of a sudden everybody realizes there's other stocks out there. And it takes a while. That's why Wall Street is kind of like, it's like fashion, basically. Right now, Nvidia, is I don't know who the big fashion person is now, but is the who's the guy that your son went at for the Hollywood or for Halloween?
He's dead.
He's like Nvidia's the Lagerfeld. The Lagerfeld
Well, I mean,
right now.
Karl Lagerfeld. I mean, Valentino is a pretty famous designer. I don't know if you
or Valentino. Yeah. Okay. So
Valentino's famous.
And then there's all these other little houses, and all of a sudden one becomes
get
big,
out of here, you. Get out of here.
Bring him on.
All right, a little guest appearance from our famous designer Valentino. Anyway, you were saying, Andrew?
So anyway, I think that's kind of part of, you're like, wow, we're at all-time highs, but a lot of stocks aren't. Like Tons are
A
not.
lot of them. A lot of
So,
them.
like, even looking at oil stocks, they're basically trading at like very low multiples. They're paying a pretty good dividends, higher than you're going to get by buying a government bond. So a lot of that stuff will end up being attractive to people at some point. Um, even if the big names pull back and money starts going, some profit taking and stuff like that. I mean, the fact that Nvidia finally sold off somewhat after, what is it, up 35%, but
Mhm.
just prior to earnings to now, up 35%. And the earnings were what people expected, right? Huge growth. And then it split and everybody bought it after the split. I mean, it's going to pull back naturally because of just the action like that. But anyway,
All right.
that's
Well,
kind of
It's
right.
healthy, right? It's healthy. You need those pullbacks to
You
just
do.
keep it. It doesn't mean that it's over. And I think the rebalancing of all that is healthy for the entire market, right?
Mhm.
That
Yeah.
it can carry us higher.
Yep.
Yes. I was gonna do we're running a little long. I was gonna do just to make you happy. I was gonna do CVS for our stock of the week, but well, let's just jump to the stocks that we like. And Leisha, last week you were talking about gold as a potential rally. Or no, you were talking about
I
CLSK.
was talking about CLSK.
Yeah, and this week you're also kind of looking at gold. So what did you see in CLS? How did CLSK perform last week?
CLSK did well. Yesterday it had a
wow,
nice
nice
little
trade.
pop before reversing. I still have a little bit of position. I still think it could pop over that median line. But my favorite this week is gold for sure. As I said, I think 223 on GLD, possibly 226.
All right. I've been kind of pounding the table on J&J and 3M. The 3M's been performing better than J&J, although I think J&J is about to bust out here, Alicia. You tell me whether I'm telling tales outside of school. But J&J looks like I think is going to break the consolidation it's been in. I want to go higher.
Oh, yeah. Once you break out away from these tops, definitely. J&J looks like it could trade away up here, and the median line is at 151, 152, 151 half.
All right.
That's good. That would be a really nice move.
It will be.
This is
This
bullish.
week, I think Robinhood continues to look like, you want to buy these little pullbacks. Yeah, J&J looks really strong. That was a really nice move yesterday.
Robinhood has a nice little hammer today from yesterday. That could possibly hold on the 21 day.
And the vols pulled back too. It's the options have gotten cheap again.
Yeah, I sold 20 puts last week in there.
Good, nice sale, Andrew.
Yeah. Well, we'll see. I could be wearing it one, but
wow. And then Andrew, you threw in Sibo and Chewy for this week. Now, Chewy, the dog delivery, is that what Pearl gets her?
I have to say, you drive around in Maine and down a neighborhood, and almost every house has a Chewy box on the front porch. Now, I don't know. It's a small sample. A lot of dogs in Maine, but anyway, I think Chewy is one that could go be like a $40 stock by the end of the year. I'm pretty long that one. You and I got assigned, as we recall, famously a long time ago. We're like, $21, it's a layup. Watched it go to 15.
Yeah.
And I flipped out of stock and bought calls so I could increase the leverage. So that has been a good one this year. And SIBO, I'm adding a little more to my position in here. I think SIBO will be a huge winner in this whole thing, mostly also because of them pulling more over the counter into their Flex product, which is an OCC cleared product. So I think, yesterday, huge growth. And I mean, it was the biggest option volume day, I think, ever. 60 million contracts, crazy. Like Nvidia traded 7 million contracts by itself. So I know there are a lot of exchanges. There's a lot of just Mickey Mouse exchange, whatever, I think, out there at this point. But
They're building an exchange
SIBO's
here in
still-
Texas.
Yeah. SIBO's
Yeah.
Stock
hesitating,
exchange.
so, and they'll just end up just buying them or whatever at some point. But so anyway, I think that's a different financial play. And
I mean,
there we go.
SPX did 3.6 million contracts yesterday. That is just SIBO 100%. That's all of them. I don't hate the idea. We're going to be at the SIBO in July for our option pick conference in approximately 1 month. We've also got an amazing group of guest speakers. If you have not registered and you plan on attending, reach out to my team, 888-872-3301, and ask them about how you can join that conference. Now, Andrew, you and I, we're all showing up a little bit early. We're going to meet. I'm going to take everybody to dinner on Sunday night that works at Option Pit. Some of us will be driving in. Some of us will be flying. Some of us may be taking a train. But no matter how we get to Chicago, the best ride will always be Andrew's trading vehicle. In this segment, Andrew shares his wealth of knowledge about how to trade and what vehicle he is choosing to execute his thoughts and ideas while Alicia and I go grab a cup of coffee. So with that, I will hand it over to Andrew.
That was excellent. Ruben, if you want to put up the slide real fast. So what I wanted to explain today is the trading vehicle today is VIX. Funny enough, VIX is not getting a lot of action. A lot of stuff on the internet about, VIX is broken, VIX is not broken. That's all bunch of crap. VIX works fine. It's doing what it is designed to do. Mostly what people don't understand is that, what you're watching and what are the volatilities that you're seeing in VIX. So right now on the screen, you're seeing like realized vol and SPX. So is the market pricing risk? Like, is everybody saying, oh my gosh, we're at all-time highs. There's, and VIX is so low. Well, the market is like it doesn't care about the risks somehow. And that's not correct. So right now you actually have realized vol. You can see the chart. Realized vol is basically how much has the SPX moved close to close over the last several weeks, months, whatever. And so how the market's been trading basically is pretty bull market style-y stuff. Very low realized vol. So close to close, you might have, if you've noticed, right, every dip gets bought. That's bull market. The reasons why, I don't know. I don't ask why anymore after all this time. Just when you're going up, you're going up. But it's accompanied by relatively low realized vol, which you can see now we're at a 6-month low for the year in realized vol with a peak in stock prices. So those are relatively confirming things. The next part is how much is the market charging? Well, if you look at VIX is 1351 and realized vol is 6%. So if you're a liquidity provider and you're buying options delta neutral, like you got to scramble. Like, so I'm in the pit, I'm trading, you're buying options, SPX, whatever. If you're accumulating long gamma, long vega, the market's not moving a lot. However, it is moving in one direction, which is mostly up. So you kind of have a sneaky realized vol because, if you hold positions, you will get, in a week or 2 weeks, the Q will move 15 points up. Pretty much anything you buy is going to pay if you buy calls or you have some long gamma. So what the market kind of, switches to is, volatility is actually is well priced here. Like at 13.5 VIX and SPX, remember that's the 30-day straddle. You're looking at 30-day SPX. So like it's pretty well priced relative to how the market is moving. Like well priced being it's not cheap. So like in my view here, like you want to, VIX makes a good vehicle to buy. Like I'm buying strangles in VIX right now. Because if we continue with the jump in, if stocks keep kind of do this meandering up, we could see some actually compressing, and that's how you get to lower VIX numbers. You need to have low realized vol, which is what we're starting to see in the SPX for an extended period of time. The last time we had it was 2017. And we're on a similar trend. We've had 325 days or something without a 2% close to close sell off. The last time that happened was 2017. So I'm not predicting a Volmageddon style, but you need lower vols for VIX to get to lower numbers. And that's kind of what we're seeing. So I think the best way is just by buying strangles in VIX, like in the money puts and just out of the money calls in VIX. And you hold on to them for a month and, you know, you sell what pays. So those are the positions I've been buying. I've been buying them in our pro room, and we'll see what happens. But don't be surprised if, you know, we kind of just keep grinding higher and VIX all of a sudden starts to grind lower because the bid for those options starts to go away. So that is my trading vehicle and volatility risk premium. And at least right now, options are, I would say, at least fairly to slightly expensive relative to what's going on every day. And that is my trading vehicle for the day.
Well, what a vehicle it is. You know, I want to briefly talk about, you know, with Andrew, when he talks about his vehicle, the reason why he's able to dig into it is because he knows the stats and he knows how volatility moves. One of the things we do here at Option Pit is deep dives into stats, probabilities, how we can make money. We have done a deep dive into our zero DTE. Speaking of the SIBO, our zero DTE service that Leisha and I run, and we figured out that in using some specific stats that we could figure out days where we wanted to go harder by doubling down on our trades. And we are starting that doubling down today. Leisha and I are going to go live in zero DTE at 10:30 a.m. Eastern time. Leisha breaks down the charts, and then I come on and I'm going to show everybody a few tricks of the trade, things like legging in. I'm going to talk about when and why I want to double down on a trade. I probably going to, today looks like it's going to be very low on the double down meter. And so we're running for the first time ever. You can join Leisha and I on an annual subscription, something that we used to only offer monthlies and quarterlies. So if you'd like to join, you know, give my team a call, 888-872-3301. Doubling down is something that should be done when you see a huge opportunity. I see from a broader perspective, if there was one theme on today's show, I would argue that it was rotation, out of maybe big tech taking a pause while the rest of the market rallies. There is a trade that each of us have in mind around that, and we're going to be going. I mean, I've got an idea that I'm going to be bringing to trading desk, Delta Strike, and zero DTE, because I believe really strongly in it, and I'm going to go hard on it. When you see an opportunity to double down, you should take it now. With zero DTE, we now have the ability to probably double down about 30 to 40% of the time. And I think, if we had done that on the 71 trades that we've done this year, our returns would have increased by 50%. So I'm really excited about that. If you want to join, give my team a call, 888-872-3301. All right. Well, we're running up against it, and S&P futures are down 3. NASDAQ futures, VIX futures are up 5 cents. NASDAQ futures are flat. Dow futures are up 2. What do you think for the day there, LJL?
I would watch this open. It may be people trying to get out before we turn around, because yesterday was kind of bearish. So you never know, though. We could get a surprise and hold our own here. But I'd say probably down a little on the day.
Andrew?
I'm like watching the Qs just green. So if Nvidia can kind of get smoked and the Qs can still stay green, maybe some money finds. That's kind of my little thesis here. Selling a little Nvidia and then buying just everything else. So I think you follow the Q. If the Q's green, will be green.
I like long Dow through next week. That is, I would be buying the diamonds. But I think the S&P is going to soften up. I'm with Alicia. But it's hard for the Dow to rally and the S&P to have a really rough period. So for S&P bears, it may be a very, very slow walking bear that doesn't walk very far. It may be a fat, lazy bear. So don't get too excited on any of these sell-offs. But I do like some of the mega caps to take a bit of a breather here. That's kind of my take. All right. Well, it's now we've come to the end of our Option Pit Live program. In today's show, we went through the big rotation. We talked about what's happened with NVIDIA. Alicia broke down a bunch of charts, and we chatted up gold, Hood, and Chewy. And we took a ride on Andrew's VIX vehicle. So with that, for Andrew T. Giovinazzi, the Viking of volatility, the vicar of the Viking of the VIX, the vicar of volatility, for Leisha J. Leslie, Queen of the Candles, the Belle of the Beach. I am Mark Sebastian, your only option. This was Option Pit Live. We'll see you next Friday. We're here every week at 8:30 a.m. Eastern Time. Make sure to join us. Have a great rest of your trading day.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.